Hello and welcome to another update video about Solana. Yeah, Solana seems to be following either this orange wave count or the wave count in white, which I made you aware about in my last video yesterday. We already saw it coming. I mentioned to you that the immediate bullish count in yellow there, the direct impulse becomes less likely, and we have to prepare for a deeper pullback in either orange wave B or even the white C wave to the downside, even though I'm leaning towards the B wave pullback here. We can actually add the 38.2 retracement level here as well, just because sometimes B waves can be shallow. We don't have enough structure to really suggest which one it is, but we want to talk a little bit about that in this video. So obviously the main thesis at the moment is still that the larger fourth wave completed here on the 23rd of January. That's unchanged and also isn't affected by a deeper pullback as long as the price stays above the $79 level, because this is the wave 4 swing low. Any break below that will invalidate this assumption. However, we already get a warning that things are going to get invalidated with a high likelihood if there is a break below $86. That's the 78.6 Fibonacci retracement of the rally here to the upside that we've seen. Okay, so that is why I added this box, because we already saw it yesterday coming, actually a couple of days ago already, that the market did not really follow an impulsive structure to the upside, and at least, well, it could still do it, but it did not clearly adhere to the micro count, and that's always a warning. I mean, that is really one of the benefits of following the micro counts, that we quickly get notified and quickly get a signal that, yeah, it doesn't really look right anymore. Yeah, so therefore I also reduced or eliminated that support area for the impulsive structure yesterday, even though it could still turn around here. I mentioned to you, in this impulsive direct pathway to the upside, it is possible that we're dealing with a flat structure, but also that will become far less likely if we see a break below $106, which is here the swing low from this box. I actually did hide the levels to make sure that you understand it's not relevant anymore, this box. It was relevant. It generated a nice, I don't know, scalp trade for anybody who wanted to use it, but essentially the $106 level is the 78.6 retrace level of this rally, which could be a wave 1 in the impulsive structure, but it starts to look a bit strange. Yeah, so it would have to be an expanded flat now, and we're already down at the 61.8 retracement level there. So in the area between the 50% and the 61.8, and I have at least now no evidence that it's bottomed. So yeah, again, it still could. Okay, so keep an eye on these Fibonacci levels. They are objective. Below $106, I would clearly favor the orange wave count, which means, okay, B wave down. How would that work out? It would most likely be a count like that. A wave down, B wave corrective rally, C wave down. So also then that means that if any move to the upside stays corrective now, it would just rather confirm the B wave thesis, that we are in a deeper B wave pullback. B waves are very, very difficult, which is why I highlighted that support area in orange, which means it's not really a great setup. You can watch for reversals there, but A-B setups are difficult. Why? Because B waves can be extremely shallow. They can be extremely deep. B waves are among the most difficult waves really to forecast. And therefore, I highlighted in orange. Orange just means, yeah, I wouldn't be surprised if it breaks, because as I said, B waves can overshoot. Nevertheless, there are some standard support levels to watch that, yeah, you could use to observe the structure. And yeah, in the orange count, any rally should stay corrective. But if we see it, if we see impulsive movements form to the upside again, it's likely still wave 3, which, however, becomes far less likely below $106. So if you're interested in the microstructure or not, doesn't matter so much. I think key is to focus on the $106 level. That's the next main support level, depending on which stance you want to take. If you believe that the impulsive structure is going to play out. $106 for me at least is the line in the sand. And the official invalidation point for the yellow count is the $103.70 level. Below that level, it's likely the orange count that will be tested next. And if we also breaking below $86, it's likely white. Would that be bearish? No, it wouldn't be bearish. Short term, yes, but it would still be covered by an overall bullish scenario, because all that would happen, we would just simply reset the wave 4 a little lower, and we can still start the wave 5 later. That would only change below $47, and we are far away from that level at the moment. So overall, no change to plan from yesterday. I think the warning came hopefully just in time. The yellow count is not lost. Yeah, it's not lost, but obviously it's getting challenged. And because it is getting challenged, I'm actually not showing another support area here because I think it could break. But yeah, it could still nevertheless find support. I mean, technically speaking, these Fibonacci support levels are still relevant, but I think there's a good chance of a break. And yeah, below 106, I mean, it's likely gonna follow orange. Okay, that's all I can say at the moment about Solana. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.